I have lived in the UK for 20 years now, and in that time, I have never, not once, found myself longing for a bit of grey, drizzly sky or wishing I could put on a sweater until now. This summer has hit so different because right now, the UK and most of Europe are experiencing a heat wave that's not just totally uncomfortable, it's historic. So here in the UK, we've had temps in the mid 30 degrees Celsius, and if we zoom out to the continent, the picture is even more intense. You have southern and central Europe who've been sitting under what meteorologists call a heat dome, with temperatures hitting 45 degrees in places. So grab a fan and settle in. I'm joined today by portfolio manager Dean Cook, and we will talk you through some cool facts on the heat wave and why they are becoming an increasingly important economic and investment story. Dean, let's start with the obvious question. We've all felt the heat this summer, but how unusual has this 2026 heat wave actually been?
Thanks, Nicole. I guess the short answer on a long-term basis is that it's very unusual, but it's becoming more commonplace as we've all kind of experienced over the last couple of years. And in fact, this is our third distinct heat wave only this year. 2025 currently holds the record for the UK's hottest summer ever measured, but 2026, I mean, it's fast on track to beat that. So we could be looking at two record summers back to back. And what's particularly striking isn't this isn't just a UK story. You mentioned the heat domes across Europe, Spain and France in particular. And heat waves like this, particularly on a pan-European basis, we used to be considered sort of once in a decade, once in a 50-year kind of event. But what we're seeing now is that the incidence of it is increasing, and so becoming some sort of economic variable that businesses and markets need to consider.
So I want to come on to that. So when temperatures reach these levels, where do we see the biggest impact, other than all of us collectively complaining, of course?
Yeah, that obviously creates a lot of hot air. But the easiest way to think about, I guess, the extreme heat, it's about how much we can produce, what things cost, and how much energy we need. So first off, there's productivity. So many sectors, as you can imagine, simply become less productive when temperatures rise. We as office dwellers can't really complain, but construction, agriculture, and manufacturers all find it hard to work efficiently in extreme heat. There's actually some research that suggests that once you hit 30 degrees, each incremental degree above that, you see labor productivity fall by around 3%. So it adds up pretty quickly. The second would be agriculture. So as crops come under pressure, there's from the heat and the drought conditions they're unused to, and it's not been long enough for the climate, the crops themselves to adapt to. Food production itself falls and prices, as you'd imagine, would rise. And that's one of the clearest examples of how climate and the events around it can feed straight through into inflation. And then there's energy and grid strain. So if one looks at a country like France, they get roughly 70% of their electricity from nuclear power, but the energy providers, they have to shut down nuclear reactors when river water that they use for cooling gets too warm. The UK has also had heat-related output reductions right when air conditioning demand is spiking. So there's a clear supply-demand squeeze there. So what starts out as a weather event, well, that's quickly becoming an economic story. And so that's one of why some of the estimates around European growth have been so striking and the way that they've been changing.
And I want to talk further about that. Like I read the other day, there was one Dutch bank that estimates Europe's heat wave could shave around 1% off of EU growth this year. And that's against the European Commission's EU GDP forecast of just 1.1% for 2026. So on paper, that's close to erasing it entirely. So I guess with that, Dean, what should investors be thinking about?
I've got another three things for you. So the first would be inflation. That's always an important investment consideration. So we were just talking about food production, energy supply. All of those things have the potential to keep inflation stickier than markets might otherwise expect. If you were to just look at a country like the US, they've been running above their inflation target for nigh on 5 years. And that's a difficult starting point when thinking about the impact of further rising prices. Second, corporate earnings, so sectors exposed to labour, particularly the outdoor sort, agriculture, utilities, they'll all feel that impact of lower productivity and higher costs and might not be able to pass all of that on through higher prices. On the other hand, you might have businesses focused on grid infrastructure, cooling or climate adaptation that could see potentially stronger demand. but you make a good point around the economic growth impact potential. So central banks sit at the center of this. So they've got the heat wave slowing economic activity at the same time as pushing up food and energy prices. And that's going to make interest rate decisions far more complicated for them. So I guess the broad takeaway should be that climate is becoming an economic risk, which is itself becoming a market and investment question as well.
Okay, so here's where that leaves us. This isn't just a long-term expat complaining about the weather, though for the record, I really am. What we've heard today is that investors increasingly have to think about the heat waves as a recurring economic risk, and that's quite a shift from where we were even a decade ago. Thank you, Dean. Thank you all for listening, and join us again next week for another topic that's caught our eye.
Thanks, Nicole.